This program is brought to you by Real Estimate. Know the value of your home today with a Real Estimate from realestate.com.au.
It's great to have your company here on Business Now. Well, being the first Monday of the month, we get just a look at how home values moved in the previous month, so that's October. And I can tell you, they've had a pretty strong boost. But first, let's have a look at the home auction markets around the country over the weekend. Nationally, just under 1,900 auctions, and a little over 60% of those were successful. We've told you Sydney is a little weaker than other cities right now. It had 951 auctions. Just 57.7% of those were successful. Melbourne had just 375 auctions. That's affected by the Melbourne Cup Carnival and Derby Day as well, and a little under 2/3 of those sold. Brisbane had 103 auctions. It's a bit stronger, just under 71%. Adelaide, 71 auctions, still strongest of all, just under 75% sold. And Canberra had 100 auctions, and around 2/3 of those went through. So let's bring in here Angus Moore, who is Senior Economist with REA Group. Angus, always good to chat to you. The latest home prices, the data that you put out today pretty much show that the buyer's appetite it really pretty much accelerated during October.
Yeah, thanks for having me, Ross. You're exactly right. We're still seeing pretty solid growth in home prices really right around the country at the moment. Prices over the past year are up about 7.5% nationally. And notably, we are seeing pretty consistent solid growth in Sydney and Melbourne. Markets that, last year in Sydney and for the past really 3 years in Melbourne have been pretty weak. Both cities were up 0.5% or a little over in October. They're not quite as strong as the national pace over the year, in part because they're not seeing as strong growth as we are in smaller capitals, but still quite consistent.
I think a lot of people will be surprised if we just put up the values of the median home prices across the various states, and just seeing the Brisbane prices right now are not far off $1 million. Sydney, 20% more at 1.2 million. That Melbourne prices just under 850,000, exceeded by both Adelaide and Perth, and if we throw in Canberra there as well. So this is a change in the dynamics that we've spoken about over time. The question is where the momentum is right now for future home price growth.
Yeah, exactly right. Melbourne's in many ways been lagging the rest of the country for the last 5.5 years. Prices in Melbourne basically tracked sideways from when the RBA started raising rates in early 2022 until it was really only September that they got back to that mark that they'd been at. That's in stark contrast to what we've seen in Adelaide, in Perth, in Brisbane. Prices in those cities since sort of early 2020 have, in round terms, doubled. That's made them a lot less affordable relative to Sydney and Melbourne, and in absolute terms as well, but particularly so relative to Melbourne, given its slower pace of growth.
Okay,
that does look like it's changing. We are starting to see consistent growth in Melbourne, but it's still not as fast as we're seeing in some of the other parts of the country.
Okay, then there's no doubt there was momentum in the property markets during September and October. They've certainly picked up, perhaps except maybe in Sydney. Now, the fact is, it seems people were anticipating interest rate cuts, maybe multiple rate cuts. Now, they seem less likely into the future. What's your own sense of what happens from here?
Yeah, I think that's the big question and the big question mark at the moment. Obviously the data we're looking at here really predates the sort of surprisingly high inflation that we got at the end of October, which largely squashed the chance of a rate cut tomorrow. So, what we're seeing in October really reflects that expectation that we probably were going to get a cut in November, and if not November, probably early next year. That's maybe looking a little less likely now. I think that will take the wind out of the sails a little bit. But, what we're seeing here is not just on expectations of, 1 or 2 cuts to come. It's also on the fact that we've had a few cuts already. Wages are growing. Inflation is not as much of a problem as it was. That's helping boost how much people can afford to borrow and therefore afford to spend.
Okay, so who's buying right now? Is it investors trying to catch on to the shortage of properties and therefore, getting into the rental markets? Or is it first home buyers who are attracted quite clearly by that first 5% home deposit that was part of the government's election policy?
So to date, where we're seeing activity is in investors. Investors are making up near record shares of the number of new loans being issued at the moment across pretty much all of the country except Victoria. It's not at a record, but it's quite high and certainly close to in places like Queensland, South Australia, WA. And really that's being driven by the fact that rental markets still are just very, very tight. They've maybe eased a little bit this year, but they're still very tight. Rents are very high. First home buyers are an interesting one. We would expect to see a bit of a pull forward in first home buyer demand from the Australian Government 5% deposit scheme. It's only been the expanded scheme's only been operating for a month. We probably haven't seen that showing up in the hard data as yet, and we probably wouldn't expect to for at least a little bit, given it takes time to get the pre-approval, find a house and buy. But certainly it will pull forward some demand.
I'll tell you what, always good to have you on the program, Angus Small, with those latest home price data. Many thanks for your time.
Pleasure. Thanks for having me, Ross.